Hello and good weekend to everybody. Apologies for not doing videos. Unfortunately, it's been a real nightmare for me because I upgraded to Windows 8.1 on. Oh boy, what can I say? Absolute nightmare. My Camtasia stopped working. My Snagit stopped working. Literally everything just went kaput. So just watch out for that upgrade to Windows 8.1, everyone. Keep an eye on that because Mr. Intermarket Analysis has certainly man down, mayday, mayday ever since the upgrade to Windows 8.1. So watch out for that, folks. Okay, let's have a look. What's happening with the FTSE 100? So FTSE 100 analysis and insight for the week starting 18th November 2013. Okay, folks. So where are we? Okay, so let's start with the larger time frames. Always look at the bird's eye view. That's always putting things into perspective. As we can see, we're still struggling at the credit crunch high, should I say. I call this a credit crunch top. Okay, where all the hedge funds, obviously the big boys, knew exactly what they were doing, pumping all that crap CDS and God knows what mortgages they were trying to sell to the public, giving everybody the dream of owning a house when they were probably more than they obviously offloaded it to the market, and then they were shorting the hell out of the market up here. They knew exactly what they were doing. They knew exactly what's going to happen, and they made an absolute killing and fortune. Not only did they make a killing and fortune shorting the market, they actually justified governments bailing them out as well. So they made an absolute fortune from there. On top of that, they justified governments doing QE, which they made an absolute fortune from there. So the banker always wins, folks. You'll never win. Okay, don't ever try to win. They always win. That's why I day trade the markets predominantly, because I know exactly the dirty games that are being played on the larger scale. Okay, so let's have a look what's happening here. Daily chart, or should I say weekly chart, the FTSE 100. Credit crunch top 6750, 6800, solid resistance. Okay, so what happened last week? Commodities absolutely hammered. Okay, commodities hammered last week. Okay, why? Because of the Chinese plenum forecasting lower growth. The Chinese are intelligent. They want to focus on their economy. I remember I was teaching a student over the weekend doing my mentoring class, and I discussed when once one of my professors came in my economics degree whilst I was at Manchester, and he came in with an elastic band, and he said the stock market, or should we say the economy, is like this elastic band. That's all he had. He didn't have any he had no slideshows, he had no pre-prepared material. All he bought with him was an elastic band, and he said the whole of economics is within this elastic band. And he said you stretch this band, and certain governments have the ability to control the elasticity of that band. Certain governments, if they're wise enough, they can control the expansion and contraction, etc., etc. But he said certain governments, they can't control it. So he pulled on the band, and the band snapped, and he said that's what we call a credit crisis. And he was forecasting the crisis that was about to occur. He said that's exactly what's happening now with excess liquidity, lack of governance. This is exactly where the economy is going. And then the elastic band snapped. And he was a wise man. He was telling us, students, this was in 2000. I mean, how old am I now? I'm 30 years old now. It's been almost, 10 years since I was at university now, or was probably my first or second year then. Okay, so it's been a long time. Okay, so it's been a long journey. And here I am, day trading the markets. So couldn't really have got any better, to be honest. Okay, so weekly, obviously I've discussed the resistance level there. Let's go to our daily charts now. Okay, so daily charts, even though the Yanks or the Americans are moving to new highs, the FTSE has failed to propel higher, along with the Euro stocks, along with the DAX, along with the CAC. So its colleagues are weak. It's weak. Okay. Now, the concern here, which I've discussed again with my students, etc., is the fact that the market failed to hold previous resistance equal support here and here. Okay, so the 6660 level we failed. Okay, and the 6700 level we failed. So this is not looking good, folks. Okay, we've got a downward sloping, expanding wedge pattern. Overall, that generally is a bullish pattern. Just bear that in mind. Okay, but on this occasion here, we seem to be consolidating. The last bastion of support now, folks, on the daily chart is the 6630 level. Once that cracks, you're opening up the 200 MA, which is around the 6500 level. So watch that get tagged, especially given the fact that the fundamentals last week, we had Yellen, FTSE's failed to rally. Okay, Mrs. QE Queen, you know, the Wicked Witch of QE Infinity, basically came out singing, dancing QE, and it failed to lift the markets because the markets have already priced in all the QE that can possibly occur. They can't do QE4, impossible. Okay, they can only do tapering now. It's impossible to do any more QE, given the fact that you've got the debt ceiling coming back in again in January. You've got Mr. Paul now and a lot of other Democrats and Republicans against any potential pumping the markets with more QE, obviously creating inflation, etc., etc. So QE obviously hasn't worked. Okay, so they can't do that anymore. Okay, why? Again, another reason why they won't do it is because the Europeans are now talking about QE. Okay, so the Yanks can't afford to do QE. It's pointless even if they do QE because the Japanese and then you got the Europeans doing it, so there will be no bang for your buck. Okay, you want to do it when other nations are not doing it, therefore you want to maximize the potential benefits or gains of increasing your exports. Okay, so always focus on that. Okay, so on this occasion here, daily chart inside bar, provided we remain within this upper band, upper level should I say, 6730 of the upper body of the red candle, this bearish consolidation, we call that a bear flag, and down we go. Okay, given the fact that commodities got whacked, FTSE is failing to rally, mainly due to commodities. The lifeblood of the FTSE is commodities. You've got BHP Billiton, Rio Tinto, you've got Shell, you've got BP, etc., etc. Okay, so without commodities, this sucker can't fly. Okay, so remember that. Okay, so bear flag, down we go. Last bastion of support, 6630. Okay, so bear that in mind. Keep that level intact. Let's go on to the smaller time frames. Okay, less of my waffle, more to do with charts that you guys can obviously get a guide for Monday's trading. Okay, so let's have a look. We've got the unfilled gap above here around the 6720 level, so watch out for that. Again, that is a gap that must be closed, but on this occasion here, we have an unfilled gap below around the 6630 level, which again coincides with the level on the daily chart. Remember 6630. Okay, so we've got a HNS formation here, folks, so I expect the gap to close coming week. I'm actually short the FTSE with my subscribers on Friday night, 6,700, so I expect this move lower. Obviously I'll observe. I'm a day trader. I'm planning, you know, you plan your trade and trade your plan, okay, as we all know, but we also have to react to the markets, so I have to observe my intermarket analysis variables, whether it be TAFA, okay, and trade accordingly. Okay, so on this occasion here, I mean, obviously you've got support at 6650 level, you've got support at 6640 level, and then obviously ultimately 630 is gap fill, so we should expect to close that. Now, one important factor that's happened over the weekend, and everybody must realize, and my condolences and respects goes out to all the Americans that have suffered over due to the hurricanes. I think there were 10 states that were affected just over the weekend, and we have had several fatalities. So my heart, you know, goes out to those individuals that are suffering, just like the people in the Philippines. Unbelievable, the hurricane there and the devastation. So my prayers to them. You know, I'm a very spiritual person, so my prayers certainly go out to them, and I hope them. I wish them the best, and I hope they're well. And we also have Mr. Manny Pacquiao fighting next week versus Brandon Rios. So I hope he's and he'll be fighting for the Philippine people as well. Okay, so on this occasion, HNS formation. Keep an eye on that pattern there, folks. Okay, that pattern certainly wants to go down on the 10-minute chart, and obviously you've got the unfilled gap above. Very unlikely that gap will close. Why? Because again, the hurricane situation, the Chinese situation of lowering growth, etc., etc., the fact that Miss Yellen failed to rally the markets higher, etc., etc. Okay, now 60-minute chart. Let's see where we are here. The unfilled gap again on the daily on the 60-minute chart is at 6575. Keep an eye out for that level. If you do get a flush and it goes down hard, that gap must be closed. Okay, now let's have a look at this. So 60-minute chart, we're in a bearish channel. Again, it's being respected. We're at the 61% retracement. We've got this upward sloping contracting wedge pattern, which eventually should break lower, and we should move lower. We've got lower lows, lower highs. The trend is your friend, befriend it. Okay, so therefore at this very moment in time on the 60-minute chart, we are going down. The daily chart is at resistance, weekly chart is at resistance. We're into 200 MA. Obviously, you've got the only thing that you have to fill here is that unfilled gap here, and down we go. Okay, so from my perspective, previous support equals resistance, upward sloping contracting wedge pattern, and down we go. Okay, so keep an eye on that pattern there, folks. Now I can elaborate and go on other factors as well, but the main things that we're going to watch out for this week, okay, with regards to the FTSE. Why is the FTSE so weak? The FTSE is weak. Why? Because of higher rates. Full stop. Okay. yes, I agree. We've got the Chinese plenum that forecasts lower growth, and obviously with it going, sending commodities down, and FTSE obviously is the lifeblood of FTSE is of commodities. That's true. That's definitely a factor. Obviously, given the fact that QE is coming to its end and we have tapering now, and the markets tend to discount in the future, efficient market hypothesis, 6 months in advance, etc., etc., etc. Okay, so again, that's another factor as well. So bear that in mind. Okay. But on this occasion here is Mr. Wheel, which is one of the BOE members, has been talking, and he also basically revolted, who was an individual who voted against in the last BOE meeting, okay, and because he is concerned about inflation, okay. And the fact that they're concerned about inflation is causing expectations of higher rates. Higher rates, obviously, as we all know, increase the cost of borrowing and reduce disposable income. If that's hitting the consumer and hitting the producer, then obviously that's going to create negative growth going forward. Adding the fact that Chinese growth is going to slow, it's not looking very nice for the FTSE. Okay, adding the fact that you got the pre-credit crunch resistance level at 6,750, 6,800, acting as solid resistance. We really do need a catalyst to propel this market higher. The fact that US markets haven't propelled it higher is a concern. Okay, the fact that German DAX is sort of meandering along and hasn't really moved it higher either, is not taking the lead. Okay, given the fact that its topping tail is still holding as resistance, given the fact that we have the H&S formations on the CAC and the Euro stocks. Okay, so bear that in mind, folks. The CAC, what pattern do you have there? H&S formation. We need to close the gap below. Okay, focus on the Euro stocks, which generally represents the whole of Europe, and it's not looking good there. Again, looking very, very weak. Okay, France was threatened with a downgrade on Friday. CAC has already been downgraded. Mr. Hollande, the bald-headed chap, basically idiot from my perspective anyway, but yeah, he has his approval ratings are below 20%. Okay, so it's not looking good. Okay, then you got Mr. Silva Berlusconi, the rapist, who is causing turmoil in his country, and now you've got Miss Merkel being accused of not looking after the Eurozone with her excessive surplus. Okay, so this is not looking good for the euro. Okay, especially given the fact that it has an H&S formation and we are retesting the neckline as we speak. Given the fact that you've got deflationary concerns, slow growth, etc., etc. So just looking at it from a fundamental perspective right now, it's not looking good. So let's just hope Santa Claus brings out his sleigh and doesn't get stuck on the M6, okay, and the markets continue to rise. Okay, folks, that's enough for me. Take it easy. Risk on, risk off. Wax on, wax off. Goodbye now.